The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Thank you to the hosts earlier on. And let's just go straight to the market. Dow's up 190 at an all-time high, 24,840. Just kind of steps away from the 25,000 level. This is leg E in the Chapman wave, getting to some kind of resistance here around about 24,890 should be quite strong resistance. Meantime, back at the ranch, this is the daily chart. Here's the weekly chart, leg D. Very strong leg D. Look at this gap here, Monday gap. So what we're looking at is the MACD, the moving average convergence, divergence, strong. Stochastic, not quite as strong as it was back in early November, but still very strong. And the on-balance volume is up near levels that usually you start to see some kind of a pullback, both in the daily and the weekly. Monthly chart, leg E, very, very strong. What I mean by E in the Chapman wave, we're always counting the higher peaks. You get to the fourth highest peak, peak D. Other things can happen. Look, here's one of the sharp pullbacks at that peak D, and then it spiraled higher, spiked up on Friday, and now we're at all-time highs. So we've got to keep that into consideration, and the MACD and stochastic are very good at this particular time. S&P, SPX.X, there we go. S&P up 18 at 2693. Also broke out very strongly on Friday. Leg E/B in the weekly, in the daily chart. Stochastic's very good, not great, but very good at 86%. MACD is very good. And the weekly chart is in G/C with the MACD strong, stochastic strong, on-balance volume strong, relative strength index strong, and the weekly and the monthly chart in leg D. So far, all of these new highs are being accompanied by strong technicals right at this particular moment. Now let's have a look at the QQQ, because we want to go to the NDX 100 trading vehicle, the Power Shares QQQ Trust Series. Very strong single leg A from the 152.06 low that was made on the 6th of December. Here we are on the 18th of December. And what are we looking at? We're looking at 158.58. That is very good action. But if you look at the MACD, yes, it's just crossed positive, but it is way under the previous highs, even the highs back in November on a daily basis. The stochastic is good at 88%, not great, but good. And the on-balance volume is climbing. This is actually only leg C in the on-balance volume. So my thinking here is that the QQQs are going to really be a great benchmark, because they are going against the SMHs, which is a very big part, has been a big part of the QQQ series. 99.22 on the SMHs. Hey, this is not great action at all. 105.83, 2-bar Chapman wave reversal at the all-time high in November, comes down to the 95s, trading at 99.21. It has not participated. It is barely. It's been squeezed to the upside. It's like an obligation. Oh, ho hum. I better just follow the others. It's not leading at all. This is a clue to us to say, okay, not all the little components are in sync, and we've got to follow this very closely. Why? Because fund managers will start to exit some of their semiconductor holdings, not get out of it, just pull back a little bit, and that money will go somewhere, and that's where we've got to look. Where will it be? And I'll be discussing that tonight. I don't know if I've even got it up here. Yeah, tonight in the Boston Investors Group holiday party meeting. It's here in Cambridge area in Boston, 70 Memorial Drive, MIT building, E51, room 335. It's always a great event, and I get asked questions, fundamental questions, all sorts of things, because there are people from Investors Business Daily as well as Boston Investors Group. It's a kind of a party at the end of the year, potluck reception and networking, 6:30 to 7:30. I'm talking about seeking investment opportunities for 2018. I'm the guest speaker. And it's really quite easy to get to. It's the corner of Wadsworth and Amherst Streets on the 3rd floor. That's if they're not doing traffic work. We'll see. So there is parking in the back of the building. So and if you want to bring something, bring some cookies or cakes or anything you want, sodas, or some plastic cups, knives, forks, whatever it is, just to enjoy the potluck reception. So I'm really looking forward to it, and I always get asked questions that are just out of left field for me because I'm a technical analyst and I have to try to answer those, and it's a lot of fun. So let's get back to the markets. That's tonight, 6:30 to 7:30 potluck reception, and then we go on to the actual to the presentation that I'm giving. That's 7:30. So okay. Now, IWM hasn't made the all-time high. I'm suspecting that we're going to wait till this actually makes the all-time high, maybe in the next couple of days. 155.41 is trading at 154.34. It's got nearly a point to go. That will start now. This is going to be very interesting, and that's the thing about the Chapman wave methodology. Here we are, peak B in the IWM weekly chart. No other way I can count it. 134 was the low in August, and now it's trading at 154.33. It needs to make leg C, but wait a minute. Leg C says that it should still make a D. That means it's still in a bull phase. How much of a decline could it have? Well, it could have a very sharp decline and still be maybe go to C and then peak C. But it's very interesting that it's wanting very much to get to that leg D in the daily in a cup formation. Made the arch, lowercase h, now it's going to the cup formation. Let's go to gold. Gold is up about $8. Right now it's up 8.2 at 12.65. This is not fantastic action, but it's good action. And the MACD hasn't crossed positive. Stochastic is turning. It's at 25%. On balance volumes up. This is good action with the technicals, not great action. The weekly chart's the one that worries me. I think that this is just a pop-up in gold. I'm not sure yet whether gold is going to actually get to the 200-period moving average in the daily of 1278. We'll see. But in the meantime, the dollar's pulled back a little bit, still holding pretty well, not great, holding pretty well from the 91 low that it made back in September of this year. And then it runs to 95s, pulls back to the 90, 92, 93 level. Now it's at 93.56. It's okay action. It's quite good action, but not great action. So we're going to watch. There's a fight going on between gold and the dollar. If you look at silver, silver was a little bit, as I looked at it earlier today, a tad stronger, but it hasn't gone above. Oh, wait, no, it hasn't gone. 16.18 it needed to go above, and today it's gone to 16.20. This has actually started leg B in the daily chart. So that's a good sign. That's the first decent sign I've seen from silver in a while. Crude oil, CL, there we go. Crude oil is trading up 5 cents, 57.30. I think it's just stuck. It has to get above 59 to really show that it's got residual strength to continue higher. But I think it's just trading between the 56s and the 58s. We'll see what happens. It must hold 56.20 support short term. If you're looking at TLT, and this is going to be very important, TLT's pulled back a little bit. It's down 83 cents at 127.52. It made a peak E right. I love trend lines. Look at this trend line. It goes from the tops of November to December, and now we hit that exactly on Friday at peak E, and it's pulled back. We're going to be watching the yields because, well, let me do this. I'm going to talk a little bit about the yields tonight. I'm going to talk quite a lot about the yields, but I need to get to high-grade copper before we go out here. High-grade copper trading, whoa, very nice. 3.137, up 0.02. Nice, this is leg B. Good rebound in copper. I'll be back. Basil Chapman, target conditions out. Dow's up 191.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, just finishing up the chart of Baidu. I was asked about Baidu. Baidu Inc. Okay, so it actually smashed through there. All right, here we go. So we've done all those other areas. We'll get to the, in a moment, we'll get to the, there we go. We'll get to the yields. Right now, what I want to show you is this is Baidu's trading at 239.17. Leg B in the daily. It's got this mountain to climb with a really strong resistance at the 252.90 level. It's a 239.17 up 5.69. So all you can do is say, yep, the MACD is cross positive, the histogram's positive. There was a nice volume surge right there. Fortunately, it was on the up move. And the MACD crossing positive says, okay, well, look at the stochastic. Stochastic is good, not great, at 33%. The on-balance volume has made an H pattern with a strong move up over the last couple of days. I'm suggesting that if you are long, you've got to watch out. It fails so many times that a failure from here with the market, if the market turns down, say from Thursday or Friday, although this usually is a good week going into Christmas season. So just watch out. That my thinking here is that 234 to 233, that's kind of important support. If it starts to take that out, I'd be a little hesitant. But what I am looking at here is that in the rotational to different sectors, there's Chinese internet stock, ABC. Trough C to the downside in the weekly is okay, but you've got to see a really strong turnaround in the daily to help that. In fact, I was asked the other day about the weeklies. Why do the weeklies sometimes act so poorly? Because the weeklies in a daily basis, the daily is the rudder, and if the dailies come down very sharply, they can impact the weekly chart for quite a while before the weekly chart improves. In fact, you can have a really good, like the monthly chart of Baidu is pretty good, but it takes a while for the repair. I think of it as a sandwich or a hot dog. I always think that the daily and the weekly are the outer bands, and the inside, where the whatever it is, turkey is, or the hot dog. This is key, and it takes a while. But once the on-balance volume starts to move higher with the stochastic going into the 35-40%, and the MACD is starting to look like the histogram's improving, preferably going positive, but that can take a while. You got to be careful for pullback. I'm treating this just as a bounce. So if you're starting along, have a tight stop. If you've been along for a while and losing, watch out. Under 230, I think you got a problem. And if you are just starting a position now thinking, okay, I've got to stop in place. What am I looking for? You want to see a close above the open of the 29th of November of 243.88. That's going to, a close above that will be very important. Then you're changing the potential arch formation, lowercase h, into a very positive cup formation that says, okay, now we should start moving higher. And I could draw this for you, and I'll do it very quickly. And my target on the upside would be somewhere around, is that still December? Somewhere around the 250. Wow. No, I'm going to be a little cautious. To the 249s, somewhere around the 26th of December. Only if you can get to this area right here. What did I say, 234? Oh, sorry, 243, yeah. Unless you can get 243s in the next couple of days. Okay, enough with that. So that's Baidu. A couple of good questions coming in here. First one was Intel INTC. Intel was looking good. I said to subscribers to my opening call this morning, I had been looking as a potential short of the SMH. I said, no, we're going to wait for this to see follow through. There are some individual semiconductors that look good, others are not. I'm going to go straight to Ben in Tallahassee. Ben, how are you? Talking about Intel. How are you?
Great. That was a great lead-in. So I guess as a trader, somewhat of an investor, it's certainly has been beyond frustrating to try to short this market. You know, I want to say the last couple months, but really it's almost been all of 2017. And
it has, definitely.
I listened to a little bit of your show with Tommy this morning, and I heard you mention the Qs still have to make a leg D in a monthly, and so here I am looking at the SMH on a weekly basis, and I think it's either hovering or it's still below the 9 EMA on the last couple days of 400-point run, and it's like, wow, this just seems like a great short candidate. Right, there's one half of my brain. The other half of my brain says, oh, wait a minute. We still got like D in the monthly, and to try to even think about making money on a short, it just seems like, wow, to try to, So I'm almost like, why don't you just throw some money in the Qs, wait till it gets to a leg D in the monthly, and then even start considering shorting.
Yeah, so if you're looking longer term, see now we've got to, you mentioned trader, you're going to mention long term. So those are two mindsets that are in conflict. So you've really got to be thinking about some, for instance, we're fortunate in my opening call newsletter that some subscribers still have the long position in the Dow from the 22,290 level. And I said, I don't want to even think of touching that, because of the monthly charts, all of them have such tremendous strength. However, if you're looking at, let's go back to the QQQs. So the QQQ I
guess more specifically, the long side seems to be a no-brainer. Just the trend is going up until the leg Ds come up in the monthly. But I'm more specific. My question is trying to make money on the short side. It just seems to be good luck.
Let me do this. I 100% agree with you. What I'm going to say to you is, when you go to all-time highs, what is your benchmark? What do you have to do? Expansions, you have to do maybe Fibonacci expansions, you have to do Elliott wave, you have to do a whole bunch of things to say, hey, that's now the new area of resistance, except stocks and indices, they go to new all-time highs, tend to go there for a while, and stocks that go to new lows tend to kind of go there for a while. That's the expression that I've always used for the market. However, this is a little different in the sense that we've had a stimulus, we've had this tax, the bill lying there in wait. My suspicion, and there's no way I'm ever going to have to prove it, is that if you go to the Dow, the S&P, the IWM, and the QQQs, the top that we made back in early December in most of these indices should have started a more, even if it was just sideways, that kind of a consolidation, my suspicion would have been it would have been lower lows and slightly lower highs. And that would have gone on for a little while, maybe even 6 weeks. And then you could have got another move to the upside. However, this has been accelerated by the background news of the tax bill. Now, the tax bill is just a tax bill. Nothing happens for months, but the thinking gets changed. And if you have a bill that's in place, it allows companies to look ahead, and the look ahead is what the market is always doing. Can you hold on a second and I'll give you parameters that I'm really looking at?
Yeah, I guess whether it's a tax bill or stimulus 1, 2, or 3, right, you got to trade it somehow.
Okay, so we'll be back. I think it's better to look at real key support levels, and that's going to be important. We'll be right back with Ben in Tallahassee.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so there are a couple of things that I'm looking at here, and we're on with Ben in Tallahassee, and what we're looking at is for the Dow. What I'd be looking at is at 24,492. That's the 9-period exponential moving average. Perhaps it's the safest way to do it is to say, look, the Dow is not closed under that 9-period exponential moving average on a daily basis. This is incredible. Since one little blip down on the 17th of November at 23,500 and something. But most importantly, if there was a turn down in the next few days going into the end, this is important now, we've already done everything we need to do up until this very minute. Even if we go to tomorrow, the bill, I haven't heard a single word about it. I don't know what's going on with the bill other than what happened last night and looking at the market. But if there is, say, tomorrow's the day that it's signed or passed or whatever it is, that says to me that we could now look at the chance of a pullback going into year's end, but still closing pretty near the high of the year. Or you're looking at January, because I think when you get to January, it isn't so much that now that with the tax and everything, people can still sell for huge profits, because people would like to keep this now all the way through. They think, hey, this year's going to be great coming up. So I'm saying, no, I think that the market becomes vulnerable in this January period. So if there is a close, 2449 is the Dow 9-period moving average. I'm just going to give it a little roll. I'm going to say a close below 24,300 at any point in the next week to a week and a half going into any time in December, which suggests to me that we are going to see a pretty decent time, if not price consolidation, going into January. For the S&P, SPX.X, the S&P, correctly type it, S&P would be 2661. It's trading at 2693. That's 300 points in the Dow, 30 points. It's a long way to go. But if there is a close, and I'm going to make it even lower, below 2650 in the S&P over the next week or two or three, that's suggesting, yep, there comes that consolidation. And in the QQQ series, it's the same thing. I'd say it's at 158.61. I need more room. I'd have to say that for the pattern to change completely, a close below 155 suggests, finally we're going to get at least a couple of weeks of rest period in the QQQs.
Basil, I'm sorry, I've got to go, but can you, because I know this is kind of what we've been waiting for all year, is something, right? I mean, are you thinking this could be a pullback exceeding 5%? I mean, maybe 10%, or any thoughts on that?
So the real question.
Thanks a lot. I appreciate it.
So the real question is, how much of a percentage pullback? So Ben, I'll talk about that now. I know that you'll be listening later on. What I would say, and the reason why I'm saying that I want those levels to be pierced before I can say with a little more confidence that now at least some kind of a top is in, look for at best a sideways consolidation, at worst a deeper pullback. When I'm looking at something like the semiconductor index pulling back, and then I'm looking at other areas that for my opening call subscribers, we've been looking at as either wanting to go long, having been long, maybe not long right now, but it's been on our list, or stocks that we've added to. I'm saying to myself, it's the individual stocks at this point that are going to give us tremendous clues. And that says that maybe we're looking at, let's go to the XLF, and this goes directly to what I was saying before. That's why I'm looking for levels in the market to be taken out so that we can say now we're looking at a technical breakdown in the daily, which should impact the weekly. So the XLF is up 29 cents at 28.09. It did not take out the high that was made on the 12th of December at 28.33. It's trading at 28.09. And one of the reasons is, I meant to change the chart. Maybe I'll do that in the next break. I wanted to go, we'll go to this now, FVX. This is and I spent some time over the last week talking about it with subscribers. This has made a peak D, this is the 5-year T-note yield, trading at 21.59, made a high of 21.99, sorry, 1 penny off, on the 13th in leg D. It has pulled back. Now it's kind of in the mid-range of the daily chart. But the weekly chart is only in leg C. Will it go to a D? That's going to be the big question. Why? Wait a minute. D, I went to my other weekly chart. That's interesting. Did I think that was a high? 2171 to 2173. All right, I'm going to get those charts out in a moment. But what I am looking at is the MACD and stochastic in the weekly chart of the 5-year yield, still very strong. I've got it in leg C right now. And that says to me, okay, if the 5-year, and now look at the TYX.X, look at the 30-year. The 30-year trading right now up a little bit, up 34 cents at 24.23, has had a huge arch or an H pattern in the weekly chart. Monthly chart doesn't look too great. It needs to definitely hold the 26.50 area. This is going to be very important because it's in leg E to the downside in the daily chart. So now I can go to the chart that I want to look at. Let me just do this. I'm going to go right here, get out of that, close workspace, save yes to all. So tonight in the meeting, in this meetup with the Boston Investors Group over at MIT, this is the Boston Investors Group and the Investors Business Daily year-end party. That's really what it is, and I am the guest speaker. What we're going to be looking at is what were the implications? Why is this chart so different? And actually what I can do right now is if I can find it here, just to save a little time, I'll go to this is the meeting. It's on 70 Memorial Drive, building E51, room 335 tonight, 6:30 to 7:30 is the meet and greet potluck reception. And then after that, I'll be talking. It's corner of Wadsworth and Amherst Street on the 3rd floor. This is the chart I really want to look at right here. So, right here. So if you're looking at this chart, yeah, I do have it. It should be a C. That should be not a D. But what we're looking at is there was a peak C back in the 1st of January of 2016 in the FVX, the 5-year. But the Dow and the S&P were already pulling back. They had been pulling back for quite a few weeks. So they really took it on the chin in January when everything, the yield and the price of the indices came down sharply. This is a little different. And what happened was, where's that other chart I wanted to show, just because it gives a nice picture. Is this it? Yes. Look, here's the same sort of thing. This is 2005, 2006. Look, this is in a big uptrend. This is very different to this. The patterns are completely different. So I have to expect that there could be a different outcome. So I'm looking at this, I'm saying we've got divergences. It's this 5-year that's really screaming to the upside. I have to go back and make that a peak C because it was not a D. I thought it was. And now what we're looking at is something very different. We're saying, yes, there's a yield curve involved here, a flattening of the yield curve. The Dow is making all-time high. Is it doing it just on the back of the tax report? And as I said before, the tax report is looking out. It's not instant. It's looking out. And that says to me, you know, there are so many areas of overboughtness, if that's such a word, that I need to take into consideration right here, that I need to go through the different sectors, say what's working, what's not working, what has been on fire, and what is stalling right now. And the XLK, which is the S&P Select Spider Tech Fund, is pushing to the upside.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, so we are looking at the XLK. It's up 60 cents at 65.16. What's really important about this is that within the context of a breakout, yes, I could give this a reading of an F/B to have an alternate count, but look, the MACD crossed positive. Stochastic has had a really good move going to 81.83. So at this point, I'd rather give it the benefit of the doubt and say, hey, this is very much like we were looking at in the IWM, which still needs to make a leg D, but the weekly chart has made a peak B. So this makes it even more difficult looking out because, in other words, in a major bull market, we've found that going against the grain, unless you just time it perfectly and take your profits very quickly, it can be very costly, but it's costly in losing the upside momentum. It means you've got to go back in. You've lost a couple of points. You know, for instance, for us with the 22,290 long, we've lost a little bit because we've gone, if you take it away from the short position, not that much, you know, a few percent, but still, it's mentally anguishing because you say, you know, in 2009, I could have just bought whatever I wanted, and I just could have gone off on a world trip and called in and said, just tell me where are my stocks right now. You know, life isn't quite so easy, but this has been very easy for a lot of people, especially for those who have just bought and held and just sat through previous declines and said, this time I'm not going to get washed out. I'm staying in until something tells me this is a major, major top. So let me go back. I want to show this chart here because there are a couple of things on this page. The UUP has come off its low, but it's still, this is $1 power shares, held quite nicely. And the gold, the GLD, is up 71 cents at 119.39. This is in a downtrend until it really breaks decisively above. Oh, I never put it in the right side, so let me, I'm not going to do that now. And that's this trend line right here, and I'll tell you exactly what the number would be. The number says, unless 128.30s is hit in the, that's 9 points higher, in the GLD, it's in a downtrend, and I'm looking at a monthly downtrend. Just to keep it as simple as possible, look, downtrend, right? The dollar was in an uptrend, now it's in a downtrend, but at the higher level. Gold is at the lower level. The dollar is in a higher band. This is a monthly chart of the dollar. And it says that making slightly lower lows and slightly lower highs would have been not so good. But making a higher high changes the complexion. It changes this chart into something that says, whoa, you broke to the upside. That means that in a certain sense, you were making higher highs. This is the monthly chart going to that very high January high of 2683, in the UUP, but gold has been going lower. That doesn't mean to say that gold has to smash the downside, but it also says gold doesn't have to break out. It could just be participating. So let's go to the chart that I wanted to look at, which is right here. That is the 30-year white TYX yield. 30-year yield is at 2.72. It's rallying a little bit, right? It made the arch formation, didn't hit the low. It's holding quite nicely and trying to rally. The 10-year is at 10-year right now is trading at, if I can just find it, yep, right there, is at 2.376. It's in kind of in the middle of last week's candle, holding at the upper end of the range, maybe making a cup formation, a high-level cup formation. But the 5-year is right near the top of the range at 21.59. The high was 21.99, right there. So it's holding at the higher end of the range. So this chart now is different to that chart there. That's what I wanted to point out. Therefore, you have to analyze it differently. My analysis says it is going to become a problem. It could be maybe January. You never know. There's a lag time. Sometimes there's a lag time. Sometimes there's not. I got to change this. I thought it was a leg D. I don't know why. 2171, 2173. How silly was that? This is a leg C, the same as that was a leg C. All right? But I'm going to let it play out. And what it says is if the TLT starts to scream to the upside, and the TLT is the Lehman 20-year T-bond fund, if it screams into the 130s at any point over the next 2 to 3 weeks, that's when I think you have a really good chance of having all the yields come down and you have the market start to take on water. And for the first time, we actually have a good few weeks of the declining general market. That's the attitude. And that's a little bit of what I'll talk about in what do we look for coming up for at least the first quarter of 2000, even though my monthly chart is suggesting there should be higher highs to come in 2018. Now, we want to do a couple of things, answer a couple of questions. The CSX. CSX, yeah, CSX took a real tumble the other day on earnings news. It's trying to rally. It's up a penny at 52.91, but just the other day it was in the 58s. It hit 58.25 for peak C on the 4th of December, squeaked to 58.35 on the 13th, had a slightly lower high at 58.32 on the 14th of December. This is Chapman wave 2-bar reversal. Plunk, it had bad news and it's down now. It's holding the 200-period moving average. Even with the plunge, these are two green candles. It means that somebody's buying. Somebody's looking at this as a potential a buy. But I think that the weekly peak D and the monthly leg D says, hey, be a little careful. But the IYT, and this is fascinating, IYT made a new high today. I'm calling it a leg F, but in fact, I have to give it an alternate count and say it's an F/C, since that would be peak D. This could be a doji low. Peak A, peak gray A, gray E/B, and now this could be F/C. I'll put it in just to show how the wave count works, F/C, because it could be on two. See, the idea here is not to be flummoxed, to say, oh my God, we're broken down to every. No, this is the MACD is good, stochastics nice at 86%, unbalanced volumes rallied. This is a small rectangle formation, like a cup almost, and it broke out. Not a big breakout, but it did break out. I'm calling it maybe extending the F from the low that was made of that doji low back there, back in November in the 168 area. And now we're at 189, and we could still go higher, but I want to be ready. That's what it says, is be ready. And in leg D in the weekly chart, it says be ready. Leg E in the monthly says be ready. And that's right, the CEO, thank you, Dana and the Dead. Yeah, I remember now, CEO is stepping down, and then he passed away? What? He just stepped away, and now he's passed away. Oh my, that is so sad. Wow. And no succession plan in place. Well, that's what it's saying. However, I want to be looking at things like a United Parcel. Everything's over after next week, this weekend, in fact, right? Except all the delays. The package that I sent that should have arrived last Wednesday, I don't even know if it's there today yet. Well, other packet arrived right on time like it should. So they're having real problems. They must be spending a bundle trying to get things over. Their reputation is more important than making a loss because of having to get so many new workers. So I'm watching this real closely. And FedEx comes out with earnings tomorrow. It's in Leg E. Oh, what a fascinating market. I'll be back. Down up 178. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So let me do this before we run out of time. Yes, we'll talk about potential shorting possibilities, all that, maybe tomorrow and the next day. And they have to start with just a short-term, small positions. We're looking at the wood iShares Global Timber and Forestry ETF breaking to a new high. And I showed this over the weekend, and I said any move above 70.95, that's very positive, and we're at 71.08. Any move below, I think it was the low of 2 weeks ago, would be negative. So this is a good sign. It's done this all the time. It started a brand new move to the upside. Now it's getting to the angles. You know, I like to talk about angles only when they show up. Now we've gone into, you know what, I don't want to take time right now. Tomorrow I'll start to talk about these angles, and that is the angle in the chart formations. But the HGX, the Philadelphia Housing Sector Index, is under the 347.70 high of the week of the 8th of December in the weekly chart. That bears watching. So let me just do this real quickly. Hope to see some of you tonight. Come and say hello. Tiger, we have a lot of Tigers come to these events. This is the Boston Investors Group. Did I get the chart up here right here? Probably not going to find it in time. I will find it in time. It's right there. It starts at 6:30 over at MIT 70 Memorial Drive, Cambridge, Mass. MIT building E51, room 335. Love to see you there. We'll have a potluck party before 6:30 to 7:30. I'm the guest speaker, so I'm saying we, it's them. I'm the guest speaker. And I'll be talking about investment opportunities, just what we're looking at for 2000, what could take a pretty good breather in time and price, and what could be just starting the big moves to the upside. And the other thing is that I love to take questions, so it's just a fun time because I can take the time and effort to talk about something without a time restriction. So that's very important. And you can come and enjoy, if you want to bring something, fine. It's a potluck thing, sandwiches, veggies, munchies, desserts, drinks, cups, plates, and ice, knives, forks, plates. So it's just a lot of fun. So I hope to see you there. Now, let's just make this real clear. If there is a pullback today of Dow closes only 120 or not as much as 120 up, S&P closes only 13 to 12 points up, I'm saying when the news comes out, that's what we're going to see. Is there a sell the news, buy the, well, it's not the rumor, it's the truth, but is that going to be the mentality coming forward? Have a great day, stay safe, and I will be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.